There's a question almost nobody asks themselves before they put a single dollar into the market. Now what should I buy? Something quieter and far more important. Who am I in this game? Because there are really two completely different people who use the stock market, and they are not playing the same sport at all. One is a trader. One is an investor. They use the same screens, the same companies, the same words. But underneath, they're doing two opposite things. And if you do not know which one you are, the market will happily decide it for you, usually at your expense. So let's find out who you actually are. Start with the cleanest difference, the one everything else grows from. Time. An investor thinks in years and decades. A trader thinks in minutes, hours, sometimes seconds. That single gap changes everything about how they live, what they look at, and what they are really betting on. So picture two people side by side, both staring at a screen showing the exact same company. The investor looks at that company and asks a slow question. Will this business be bigger and more valuable 10 years from now? They are buying a piece of a company the way you'd buy a farm, expecting it to feed them for a long, long time. They do not care what the price does this afternoon. Remember the pizza from the very first episode. The investor buys a slice and waits patiently for the whole pizza to grow. Their best friend is time, and their main job, strangely, is to do nothing. The trader looks at the very same company and asks a completely different question. Not where will this be in 10 years, but where will this be in the next 10 minutes? The trader does not really care whether the business is good or bad. They care only about the price and which way it is about to move. They are not buying a farm. They are renting a seat, hoping to stand up and leave a few minutes later having pocketed the difference. To a trader, the company is almost beside the point. The price is the entire game. So they're betting on two different things. The investor is betting on a business growing. The trader is betting on a price moving. Hold on to that, because it explains everything that follows, including why they need such different tools. Let's talk about those tools, because this is where it gets practical for you. The investor's toolkit is almost embarrassingly boring. They need a simple brokerage account, the patience to read about a company, and the discipline to leave it alone. That is nearly the whole list. The investor's rarest and most valuable tool is not a piece of software. It is a calm temperament. The hardest thing they ever have to do is sit still while the market panics around them. The trader's toolkit is the exact opposite. Loud, fast, and complex. They live on charts, the jagged price lines you have seen 100 times, looking for patterns. This whole craft has a name. It is called technical analysis, the study of price movements and chart patterns to guess the next move. The trader needs a lightning-fast platform, real-time data, and total focus, because for them a few seconds could be the whole profit or the whole loss. Where the investor's tool is patience, the trader's tool is reflexes. Now here is the part most channels will not tell you straight, and you deserve it straight. These two paths are not equally easy. They're not even close. Trading looks thrilling. Fast money, fast decisions, the feeling of beating the market at its own game. But the data is brutal, and it is remarkably consistent across the world. Two finance professors, Brad Barber and Terence O'Dean, studied thousands of regular traders and gave their famous paper a title that says it all. Trading is hazardous to your wealth. They found that the most active traders, the ones buying and selling the most, earn the worst returns of everyone. In a separate study of day traders in Brazil, researchers found that of the people who try to day trade for a living, the overwhelming majority lost money. Not a few, almost all of them. Why is it so brutal? Because the trader is not really competing against the company. They are competing against everyone else trying to guess the same short-term move, including banks with supercomputers, armies of analysts, and algorithms that act in millionths of a second. It is a game played at a speed and scale a person at home almost cannot win. The thrill is real. So is the scoreboard. There is a name that hangs over all of this, a kind of ghost of trading. Jesse Livermore, perhaps the most legendary trader who ever lived. A man who made and lost enormous fortunes, not once but several times, riding the markets up and crashing down with them. His life is the whole story of trading in one person. The dazzling highs, the devastating lows, and an ending that was far from a happy one. When people romanticize the trader's life, his is the story they quietly leave out. Compare that to the investor's patron saint, Warren Buffett. He built one of the great fortunes in history not by moving fast, but by moving almost unbelievably slow, by buying good businesses and then, in his own words, holding them for a very long time. His edge was never speed. It was patience and the willingness to do nothing while everyone around him itched to act. Two men, two paths. One sprinted and was thrown around by the market. One sat still and let the market lift him. So none of this is to say trading is forbidden or evil. Some people genuinely do it well. It is to say something kinder and more useful to you. Know which game you are actually equipped to play. Trading demands a rare combination of time, focus, ironclad nerves, and a willingness to lose, often on the way to learning. Investing demands mostly patience and the humility to let a boring basket of good companies grow while you live your life. For most people, with a job, a family, and a life that exists outside a screen, the honest answer is that they are investors, even if the trader's life looks more exciting. There is no shame in that. The slow path is the one that has quietly made the most ordinary people wealthy. The fast path has dazzling winners and a long, quiet graveyard the brochures never show you. So before you ever ask what should I buy, ask the question we started with. Who am I? Do you want to own pieces of great businesses and let time do the heavy lifting? Then you are an investor, and your tools are patience and a simple account. Do you want to bet on short-term price moves and live by the chart? Eyes open to just how steep the odds are? Then you are a trader, and your tools are speed, focus, and a stomach for loss. Most people never stop to choose, and so the market chooses for them. You won't make that mistake because now you know there were two different people staring at that screen all along, playing two different sports. The only thing left is to decide, honestly, which one is you. I'll see you in the next one. Until then, keep it simple and play the game you're actually built to win.